Okay, this video will be on how to set up the TradingView.com app. So if you go to TradingView.com, or you can go to TradingView.com, go to the charts, set you a sign up, and then when you sign up, you'll be able to set up your watch list over here. This is my newest way for trading off of the charts of the. So I have Theta here. This is how you set up the indicators. You go to this FX right here, hit the index. It'd be the built-in automatically. If you type in MACD, moving average convergence, divergence, okay, click the X. So that's how you set it up, and of course I got two there, so I'm going to remove that one. All right, now I'm going to do moving average, built-ins, moving average, moving average, click that one moving average, click two moving averages, and you see I got two right there. And close that out. Now I'm on the 4-hour chart, so I'll open this up in the settings, and that little gear is the settings. Now you can change whatever time frame you want. You can be on the 4-hour and change this to a daily. All right, so that's what I do, is change it to a daily. Change that to a 21. The close, you want it on, set off the close. The style here, you can change that. So we can change that to, you know, if we want to make it this pink color here. And if you come down here, this is the thickness of the line. So I like a real thick line to see that. That's the daily moving average, the 21-day moving average on the 4-hour chart. All right, so this gives you the overall trend of the market. Okay, this one here, inputs, change that to 21. You leave it at chart, it'll be whatever you changed the chart to on this time frame right here. All right, we'll go close, go style, we'll hit OK. All right, so now this is the 4-hour moving average of the 21, and this is the daily. So right here, you have an overwhelming above the 21-day moving average. So then we have a bullish cycle here for this theta. And then of course when it crosses down below the 21-day moving average is bearish. Now what I've been doing is using the 21-day moving average. And so the thing about trading is you want to what? Sell high and buy low. So let's say you enter this trade right here. Down here on the MACD is showing that your signal line and your MACD has crossed, and you're crossed above the 21-day moving average. If you hit Alt V, it will give you a vertical line. Then what we do is we go, if you hit the gear on that line, so click on the line and then go to the gear, that will put you to settings for that line. So what I do right here is put buy 100%. Okay, because we're buying as it's going up, but it's a lower right there as it crosses the line. All right, so we hit OK. Now that's a buy 100%. Now we bought right here, and as we follow this MACD, we see right down here where the cross is, there's a sell. All right, the MACD and the signal line cross right there. So right here, I'm going to put Alt V, and I'm going to change this because why? Because you want to sell high and buy low. All right, so we're going to go text. We're going to go sell 10%. Okay, and we'll hit OK. I used to try to sell at 30%, but I can set an alert we can set an alert for this MACD, which I'll show you in just 1 second how to do. So we're going to change this to red because we're selling. All right, sell 10%. Now, if you go down here on this gear right here and go down, it says more, click on the more, and it'll say add alert to the MACD. So you'll click on that and wait for the slow computer. All right, then you want, okay, so you got the histogram. The histogram is this little graph thing here, okay? That's the histogram. And you want crossing, and I put only once, okay? So that value right there should be 0.00000, okay? Because you want it when it crosses, this histogram crosses zero line, okay? So you create, all right? Now back to the chart. So we come up here, we sold 10%. Then we come up here, right here, as this crosses, we're going to sell 10%. So we're going to hit Alt V, click on that. You can put your little text in here, sell 10%. Okay, hit OK. All right, now we see here it went down. So right here on that at 8 o'clock in the morning, we're going to do here, and we're going to click on this one. You come over here. Now we're going to sell 100% because we crossed below the 21-day moving average. All right, so you sell there. Now, right here, once again, the histogram crossed the green or changed to a green bar, and it's also the MACD is above the signal line, and it's above the 21-day moving average. So you can hit Alt V, and we're going to hit our gear, and we're going to buy 100% right there. So we'll buy 100%. All right, hit OK. We're still on it, so we're going to hit green. All right, remember, we're buying low, selling high. All right, come over here, right here. Alt V will give you that line. Click the red, click the gearbox, sell 10%. So instead of waiting for that 30%, all you do now is set this alert right here, and then when the alert goes off, and you can set it to go to your phone, you can set it to just be on the chart automatically. All right, so we sold 10%. That was a profit. Come down. All right, it's crossed over. So we went right here. This green line. It's crossed over that zero. All right, now it's come back down. We're going to sell another 10% right there. As long as it's higher than the last time you sold, you should sell the 10% because that means you're selling for a profit. If it's lower, don't worry about it. Just wait until it comes back up or until it crosses the 21-day moving average right here where I'm pointing, and that means then you sell 100%. All right, so this is where that crossed right there. So if we come over here, we see there was another cross, but that could be yay or nay because that could be a little lower. So we wouldn't want to sell there. And we would wait. And now look, it went all the way up, all the way up there to 850. And so we would sell right there. Sell another 10%. All right, sell 10%. All right, then you would wait because it hasn't crossed. So now right there, you'd sell 100%. You'd get totally out of whatever you have. Now, me, I'm never selling 100%. I have a long-term trading and a short-term trading. So this is just for short-term trading. I have some that are just set to the side and they do nothing but just hodl, as people say. All right, so we're going there. Go to the gear. Change this 10% to 100%. It's red already, so we sold right there. Now, here's on the downside. So if you look, now you're looking for what to buy high, buy low, sell high. All right. Now, as it's coming down, what we're going to do, we're going to buy. So we're going to buy on every bullish cross of the MACD. All right, so right there, we'll hit Alt V, change that to green, hit that, buy 10%. And what you're going to do is you're going to dollar cost average all the way down as long as it's below the daily 21-day moving average. Hit that. Hit your Alt V, open a line, buy 10%. All right, now as it comes back, look, so you bought some right there at $7.08. Now look where you're going to buy this next one. You buy this next one way down here at like $6.50. So you're going to buy more for the same money. So 10% of what you sold at that 100%, you're buying, you know, you can do the math on that, and it's, 15%. Let me pause that while I put some lines on here. So we have the buy 10% here, buy 10% here, buy 10% right here. As you see, as it's going down, we're buying on all the bullish crossovers, which is again the MACD crossing above the signal line right here, or the actual histogram crossing the zero line, okay? And so here we got 10%, 10%, 10%, 10%. And I'm going to show you something here in a minute when we go to just, these are all the Heikin-Ashi candles, which you can just click right here, and this will change, all right? And I'll show you something when we go back with price. So you that do math can do the math on what kind of buying increase by 10%. And so basically what this is let's say over here you sold $1,000 worth of theta on this cross right here where it says buy, the buy 100% and sell 100%. All right, so let's say you sold $1,000 there. You would take that, you would take $100. You'd take another $100, another $100, another $100, another $100. All right, so there you got one. All right, it crossed to the red, it crossed back to the green, put another 10% right there. Okay, I'm not going to put it on there because I'm running out of time with this video. All right, then it goes back down, another green one right here. Okay, and then one last green one right there. Now watch this. So let's go to the candles. I got 2 minutes. Now look right here. All right, so if you were to buy 10% right there, your first 10%, $100 divided by $6.52. Okay, now this next one you wouldn't have bought because it was higher, okay, and it didn't cross the 21-day moving average, so just leave it there. So remember, $6.52 on this $100 right here. Now look at this one over here. That was only 10 days later. You take $100 and you're going to buy it at $4.77, which is almost like a 25% decrease in price, but your $100 is going to buy 25% more theta. All right, so now you have another one right here, 7 o'clock in the morning on December 10th, 442, 440, $4.40, all the way down to $4.08. This one here is $4.14. So this is higher, so I wouldn't have bought there. All right, now this one here is $4.09. It's higher, I wouldn't have bought here. So what we're doing now is we're waiting for it to cross and get an alert on the crossing of the 21-day moving average right here. And then we're going to buy 100% again, and we're going to let it ride, and we're going to do the same thing that we did over here, and we're going to sell every cross over. Okay, so there we go. Leave comments in this comment section if you got questions.